Welcome to the Real Estate Entrepreneurs Podcast.
Welcome to the Real Estate Entrepreneurs Podcast. Today, I have the honor of having my friend, Mr. Lou Brown, who has impacted thousands of people with his certified affordable programs. And we've been friends now for quite a few years. We've been knowing each other. I love what he does. We've been on masterminds together. We've been on trips together. We've had a lot of fun. And today I have the honor of having him back on the podcast because you were on my podcast already back in 2021, maybe a few years ago when we were in, I think it was in Jacksonville, Florida with one of Team Mice event.
Yeah, baby.
So
that was right. Yeah,
yes,
we did a whole hour there.
We did a whole hour, but today, so if you want to know who Lou Brown is, guys, go back and watch that podcast because that's where he told us his whole life story, right? How he got to where he was until that point. But today we're going to talk real estate, man, because when you have somebody like Lou Brown on a podcast or on YouTube or on a video, we want to dig down into the strategies with somebody that has not only the experience, but that has a wealth of knowledge when it comes to doing deals, multiple deals, different types of deals. And you know, his life experiences are amazing, and you can go back to the other podcasts and watch that or listen to that. But today we're gonna talk strategies. Something I personally want to give you guys my Rolodex. Like you're always got somebody in your Rolodex, Lou, when you're like, man, who do I ask this question? Like I have this deal that's all tangled up. Who would I ask? Who may have the answer for this deal? And on my case, I have a friend that is a friend of yours as well. His name is Ray Sasser. And when I told Ray that you and I knew each other, he was like, man, you know Mr. Lou Brown? And I said, yes, I do. That man is a wealth of knowledge. So when somebody like Ray recognizes that there is another person equally knowledgeable or more about the world of real estate, that gets my attention, right? So, Lou, thank you so much for coming in today, my friend. I appreciate you. I know you're a very busy man. And can you briefly tell us, Lou, what are you up to today in 2025?
Well, you know, Ricardo, it's so much fun. I love real estate, and I'm now in my 6th real estate cycle. So one of the things I learned, because I've been in this game for a long time, is I learned that cycles are planned. They don't occur naturally. The powers that be, the elites, they plan these things in advance. They plant the trends in the media. They tell them to write certain stories and they pull the slant. We've seen it happen over and over again. And I said, man, so if we know it's coming, then we can plan too. We can take advantage of markets in advance of them doing exactly what they're up to. And I've enjoyed the ride. I've learned a lot. You know, in 2008, 2009, when a lot of people dropped out of this business, I was still here. Listen, I've been in this game over 40 years. Wow. Buying, holding, and selling property, right? So I've learned a lot. I've figured out some things. And I said, the whole game really is survival. If you can survive whatever they're throwing at you, you're going to win. There is no question. Inflation is going to be your friend, not your enemy, when you own assets. So I'm a big believer in the buy, hold, sell strategy. And that means that the folks that I'm working with, I'm intending to have them in my portfolio for a while, in some cases for a very long while. So I flipped the script on real estate. I completely shifted back then, and I said, you know what we need to focus on? We need to focus on buyers. We need to focus on people that have big, fat down payments, people that can afford the monthly payment, and people that are excommunicated from the banks. The banks don't love them. They don't fit inside the banker's box. And I said, okay, we're going to be outside the box thinkers and outside the box funders for these folks. So we purposely attract buyers. We purposely attract people with the mindset of someday owning a property. And then we show them through our path to home ownership, we show them exactly how they can win at the game of home ownership.
That's kind of like reverse wholesaling, right? You get the buyer first and you attract the buyer, and then what do you want? It's like, that's the best sale that you can do, is when you can meet somebody's expectations and needs, right? So you're taking this on a reverse engineer model, which is, let's get the buyer, let's figure out what they want, and now we're gonna go find what they need.
Yeah, baby. And so I look at it where I'm finding that customer, and you find that they're very, very flexible because you're asking them. But more than that, when they join my membership, we have a membership. It's called the Path to Homeownership, and when they come in, pay their $50, we put them with a licensed mortgage loan originator. So we go ahead and do a full blown analysis of this individual. We find out how much they've got in the bank. We find out how much they can afford on a monthly basis. But we don't have to do the heavy lifting. That's all done by a licensed professional that figures all that stuff out and gives us a one pager on that person that gives us 14 points about that person and what they're attempting to do. Now, I call that an order because now we can go custom buy a property for that person. We can go find exactly what they're looking for. And like I say, they're flexible, even on location, on type of property. And then we present it to them and say, hey, what do you think about this one? If they love it, then we go ahead and close on it. If we don't, we have a clause in there that says it has to be approved by our buyer. And if it's approved, then we go ahead and purchase the property. If it's not approved, we might still buy it for inventory just because we got a great deal with the seller. But in the case of not wanting to buy the wrong house in the wrong neighborhood at the wrong time with the wrong things wrong with it, then we just leave it alone.
Let me take you back a little bit. So, do you do? Are you in the pretty houses business? Are you in the ugly houses business? Like,
That's a good question, man. So I'm in the people business. See, instead of having an inventory of houses, I have an inventory of people. And some of the people that come to me, they qualify for a mobile home. And other people that come to me qualify for a $500,000 house. So really, I'm not limiting the type of properties I buy. Sometimes people get confused because we're certified affordable housing providers, but that doesn't mean the price point of the home. That means what the customer can afford. It's affordable for that customer, right? So yes, I even have $700,000 affordable houses. So we're definitely in the business of helping those folks win at the game of home ownership.
awesome. Now, for the most part, I would say 90% of your buyers are end users. They're gonna move into the property, right?
That's right.
And maybe what do you have investors that come to you as well and said, "Hey, find me a fix and flip," or something along those lines?
Usually what they want is they're smart enough to know that they ought to be in income producing property. They're smart enough to know they ought to have assets. So sometimes people come to me and they want a duplex or a quadruplex. And so we will buy that, we'll buy the whole building, and then we'll sell them the unit that they're in and give them an option to buy the other units. So it gives them an incentive to give us more down payment money and then eventually end up with good enough credit and good enough down payment to be able to purchase the entire building.
Okay, so let's suppose, Lou, today I signed up for the Certified Affordable Program with my friend Lou Brown, and I'm a brand new student. I don't know anything about real estate. Okay, and maybe I start watching your videos or logging on your calls or whatnot, and I start learning a little bit, okay, about how you guys do business. What would you say is the top three marketing avenues to find your buyers?
Oh man. So we turn on a machine. It's a marketing machine. I actually have a course on this. It's called the House Monster. And what we do is turn on 10 different, potentially 10 different marketing avenues. Now, of course, we use online. Online is the easiest, quickest, and it's productive. So Facebook Marketplace, we when we market a property, we're talking about our program. We want people excited about the program, not necessarily the property, the program. We want them with the mindset of a buyer. And that's why I am the anti landlord, man. I tried landlording, I did it for years. And I said, man, I don't like this game at all. People tear up the property, they move out, I call it tenants, toilets, trash, and trauma. And I said, how do I get out of this? And what I figured out
The
is
trauma portion got me there, Lucas. I'm traumatized too.
it's easy when you're dealing with people with the mindset of a tenant. So I said, how do I get on the same side of the table that they're on? And I said, what if I start offering them the opportunity to buy the house that they're in or a different house? But I'm going to be their coach. I'm going to be their support in helping them win at the game of home ownership. And so sometimes people get all hung up on their property. Oh my God, like they can't find any other property, like they can't buy another property. And somehow they were just so special to be able to find these particular deals and that like there's no other deals out there. So I laugh out loud. Listen, I want a customer. Now, these customers that come along, I can usually mark up that property to a premium price, 10 to 20% above cash market. So what they care about, they don't care about that. They care about what can they afford on a monthly basis. Well, we pay particular close attention to that. We don't want to obligate them for more than they can actually afford. So we're careful about that. And we analyze them in advance. And watch this, Ricardo. They actually become a member of the team. They go out, we tell them, what neighborhood to focus on based on what we're able to find out about them. And then we tell them to go find properties off market. Don't tell me anything online. We can do that part. Go find things that we don't know about that you would be satisfied in moving in. So they become bird dogs out there in the field
Wow.
and they start bringing us stuff.
Wow. Now, how do you find these buyers? You said Facebook Marketplace. That's number one. What's number two?
So many things. So apartment buildings. For example, if I know that the rents in
Renters.
a particular area, I'm looking for 1,500, 2,000, $2,500 apartments, and then I market to those apartments. So I found out, Trulia did a survey. They found out that 78% of people that live in apartments don't want to. They want to own a home. They have it as their future life goal. So I said, okay. So what we want to do is poach, poach these people in apartments. Ricardo had one of my students. He was a property manager, but he had 12 properties of his own. He was property managing like 400 properties.
Wow.
And he had 12 of his own. He says, well, I'm going to try your strategy. So he mailed to the tenants that were in his properties, and he found out one of them had $80,000. They were saving up their money to go buy somebody else's property. So Dave ended up selling them that property and got the $80,000 down, and he became the bank for them for the rest of the money. So he's able to sell it at a premium price without all the expense and cost of selling. And then he was able to keep that property, keep that customer, and be able to collect income from them for
Now,
years.
to target people in apartment complexes, I would say maybe the best strategy is like postcards, mailers, things of that nature, right?
Right? That's part of it. That's part of it. Also, door knocking. We literally go to the apartment complexes. I have a postcard in my house monster system, and we put it out. We literally go from door to door to door to put it right in the doorknob next to the frame, and we shove it under the door like the local Chinese uh,
Right.
uh, you know, restaurant does. They put together the menu. Well, you can actually buy space on the menu. You can buy space with the pizzeria so that they're constantly putting that stuff out to get people. I'm hungry right now, so I'm going to
Right.
call them. And so you can have your advertising right on there. So that's another way that we kind of get into the apartments, especially if they're luxury and they have gates and things like that. Might be a little bit difficult to get in, but not too hard, you know. And uh, and so that's another way that you're able to find customers. But we actually have like 10 different ways. Employers, for example, employers in the area that you want to own properties in. Well, employers will let you come in and make a presentation at lunchtime. There's foundations that will put up like matching funds for down payment assistance. So sometimes people come to us, they got like $5,000 and they need $10,000 to qualify on our rent to own level. Well, a foundation can come in and do matching funds to their down payment. So there's just so many ways that we can help people. Another is that we don't require a huge down payment when the property needs some kind of care. And about every property does, right? Needs painting, needs landscaping, needs something. So we'll give credit to our buyer for doing some
Of the
or
work.
all of the repairs to the property. And I call it repairs, but really updating, not heavy lifting unless they're a plumber, electrician, roofer, and then they can actually do work on other properties and earn credits towards their own property.
Wow. So what's the avatar? What does one of your students look like? What do they normally do? How do they look like?
Man, we literally attract the spectrum. I'm talking about every human on the earth. We've got single mothers with 5 kids that are doing exactly what I'm telling you. We've got professors, we've got doctors, literally medical doctors that are doing this. We've got people that are just getting into the business. We've got young people. In fact, I've got a lot of my students because I've been teaching for so long. They're bringing their kids to me, and now their kids are building their own portfolio. I've got one. They started with me with 2 properties. They built to 135 properties. And then their son came to my training at 22 years old. He quit college. I don't know that the parents are still happy with me, but he quit college. And now he's got 18 properties of his own.
Wow.
He's got a wife now. He's got a baby, another baby on the way. So, it's the spectrum. It really is every walk of life, every type of human. I just had Mauricio from California just joined me, this past weekend, so we have people from just all over the place.
You can do this strategy in any state?
Yes, you can. All 50 states. In fact, that's one of the exciting things about it that many of my people, I don't make
Box
them
them
have a
in, yeah.
territory, so they literally can do it anywhere in the country. I've got one student, they're in 8 different states now doing exactly this.
Wow. Now, let's talk about like the mechanics behind doing one of these deals. Can you give us briefly a 5,000 foot view of what it
Sure.
looks like?
Sure. So it's basically the marketing. You put out the marketing, and like I say, I've got 10 different arenas that we put out the marketing in, starting with online because that's the easiest and quickest, but there's many different others. And so what happens is the customers start calling. We have a script because we want to interview these people. We want to find out details about their life, about their income, how long they've had their job, what's the total household income. We're going to divide by 3 because that's the maximum amount they can afford, generally speaking. And then we're going to invite them to join the membership. When they join the membership, then we go to work because that's when the licensed mortgage loan originator collects all their information, analyzes their situation, gives us the one pager so that we can go about helping them find a property.
So your buyers become members of your community pretty much.
They do. They do. In fact, twice a month, I have a call for our Path to Home Ownership members. I actually help my students with their customers. So, so I come on a call directly with their customers and I talk through the program, answer questions, people volunteer to be case studies. I work through the numbers with them. I talk to them about becoming part of the team, finding properties, and just answering questions, just general questions of all kinds. And it's always entertaining. So I do it the first and third Tuesday of every month, and all the members join.
Wow. Now, your buyers, now they become homeowners, right? They live in the property or they rent it out, whatever their strategy is. Now, are they your students also, like to go and buy more properties, or how does that work? What's that evolution look like? Because I don't see why they need to stop, right?
Well, here's the path to home ownership. It's rent, rent to own, owner finance, and cash sale, right?
Okay.
So we've got four levels. We've really got five because we also have a VIP level. People that come to us, but they don't have even enough money for for rent. We're not interested. So we talk to them about our VIP program. They can join that. It's like a house on layaway. They put their down payment on layaway, and every pay period they pay us towards building up their option fee. We like them to start with us at the rent to own level or lease with the option to buy level, and then we grow them up to the in-house financing. And then when they eventually get good enough credit, good enough down payment, they can get a new loan from the bank. In the meantime, we got a nice fat down payment. We also get every month, we get cha-ching, 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 we get cash flow. And then when they pay us off with a brand new loan, we save the fortune of a typical sale. Plus, we are able to sell the price property at a premium.
Wow. How many people you think you have helped do this,
Oh,
Lou?
oh, wow, 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 wow. Well, I know that we have over 800 certified affordable housing providers in all 50 states, by the
Right.
way. And we have a lot of real estate agents join us because they want to add this to what they're already doing. What about a funnel? We talk of real estate agents and mortgage brokers are a great source of these people because they've already pre-qualified these people, already determined they can't give them a house, or the closing blew up at the last minute and they weren't able to get them a house. Well, they're still in their phone. So we go to agents and we tell them either you can become a certified affordable housing provider or we will take your leftovers to the people you couldn't help and you can earn up to a full commission. How does that sound?
That's pretty good, right? So now it's just a matter of presenting the deal to the possible buyer and seeing if that's something that fits their criteria, right? So now, what's the common interest rate for one of these properties? Let's say on a owner finance deal, or at least to own, right? Because
Yep.
there's can we talk about the differences in between the two? I know them, but I want the people that don't know what that looks like to hear it
Sure.
from you.
Sure. So we generally get about a 5% option fee from the people that are moving in. We do price our rents according to market. So we're not really above market like some of the models that are out there. I don't believe in that. And we give them up to 3 years to buy. And every month that they pay on time and take care of minor repairs, we give them a $100 credit towards building up their down payment. So we give them an incentive to pay on time and take care of minor repairs. So, and we give them up to 3 years. So we fix the price for 1 year and then the price begins to appreciate after 1 year. And they can grow within the program, and we have it wired into our paperwork so that they can go up to the next level, which is the in-house financing. Now, to qualify for that, they have to have at least 10% down. And so they can do that with a combination of cash plus work for credit, work for equity credits. And so as a result of that, they're able to be in the home that they want to live in. They got their kids in the school, and then we can work with their credit to build it up even farther for them to be able to get a new loan from the bank, or we just remain the bank for the next 40 years. Now, the interest rate, it's determined upon the amount of down payment they have. It's determined upon what their credit looks like. It's determined upon their trajectory. So we we look at it on a case by case basis, but generally speaking, it's going to be higher than the bank because they don't qualify at the bank. They're not bank qualified, nor are they qualified at the interest rates that the bank charges. So
S-
that's an incentive for them as well in the future for them to get better credit using our program.
Of
We
course.
even put them with a credit restoration company so that they can build their credit so that they can get a new loan with at a lower interest rate.
So you mentioned 40-year loan. Um, do you stretch it out to 40 years? I'm gonna assume is to increase affordability.
Exactly. It lowers their payment. So the longer the term is, the lower the payment's going to be. It really depends on who we're working with. And again, going back to pre-qualifying them and determining what their situation is.
In your opinion, why? Because I know they do this in Canada. In Canada, a 40-year loan is normal. Why is it that we don't see it more often here in the US?
Actually, we're seeing it more. The banks now are at 50 and 60 years.
Wow.
I, I remember when cars, you bought your car and you paid it off within 2 years. And then it grew to 7 years. And now it became a rental. You just rent the car. And
That's how I feel. Like sometimes when I finance things, I luckily I got a car paid for, and the other car I have is almost paid for. But I see these loans going to 6 7 years, and I'm like, why do I want to be on a loan that long? Number one, and then number two, I mean, I guess it's because I want to afford something more expensive than I can actually afford. That would be the answer to the question. But on a mortgage for 40 or 50 or 60 years, I mean, 50 and 60 is crazy. Like 40, I don't see it as crazy because we're already doing 30s.
yeah.
Um, and of course,
Yeah, it's not crazy. And remember, they still get the tax benefits from that. They get to
yes,
write off all of that interest that they are paying. And so they get that benefit. But one of the things that's really lost and missed by a lot of people is when anyone gets a fixed rate loan, they are paying that loan off with worth less dollars. And I like to tell people a dollar in January is a different dollar in December because inflation is a real thing. Historically, it's been 3% per year, historically, right? So that means that a dollar in January became 97 cents in buying power in December. Well, now let's take that across the spectrum of a 40-year mortgage. You're paying it off with worth less dollars, literally dropping it in half and then half again as you're getting out to those later years.
you're
So
right.
inflation is our friend when you own properties because it is absolutely guaranteed that it is going up in value. And you also get the benefit of paying it off with worth less dollars.
Absolutely. I was just thinking about that this morning, Lou. I had a property that I sold back in 2020, and I'm applying for VA disability right now.
Mm.
And one of the things about being in disability is that you don't pay taxes on the property. And I was just doing the numbers on that house. I was like, man, that house, my mortgage was like $2,300, but then my taxes were as much because here in Texas they're super high. I don't know why. And then
It's
I
because
said,
you have no state income tax.
right,
They have to make it up somewhere.
they have to make it up somewhat somehow, right? So it was almost $5,000 a month mortgage. Because half of it was taxes and the other half was interest. But then I said, if I would have kept that house today and I was on disability, I wouldn't be paying those taxes, number one, and I would only be paying $2,300 a month for $1 million home.
I rest my case.
Yeah. So literally, I did that math like an hour ago or 2 hours ago, believe it or not. And so, anyhow, it reiterates what you're saying. Now,
Well, I like to really educate people about this because sometimes people get caught up in the flipping model or, and they're just visiting. In Monopoly, there's the just visiting thing. They're just visiting. They're not in the game. People that are in the game are in it for the long game. They are going to own assets benefit from inflation, benefit from paying off those loans over a long period of time with worth less dollars, can't help but win. So that's why I'm a big proponent. In fact, my book is called Buy, Hold, Sell, and it's cash now, cash flow, and cash
Cash later.
forever.
Okay, cash forever. I love it. Where's your book at? On Amazon?
Yes, sir. Amazon. And I've got several of my books there, international bestsellers, all that good stuff. I think I have one here. Here it is. Uh, so yeah, people can
I
pick that
love it.
up, or they can go to. I
Go
even have
find it.
$5 off. I'll give them the code for that too.
Awesome. What's the code? Yeah,
So
baby.
it's yeah, baby. Street Smart Wiz, WIZ.com/BHS book. And that's buy, hold, sell, BHS book. And that gets you another $5 off versus Amazon.
No, no excuse on why you wouldn't get that book from Mr. Lou Brown. Okay, go find it, get it. Now, Lou, what is your opinion on paying off houses? I have a friend that you may know him, Scott Jelinek. He teaches that strategy on little houses and pay for and all that, and because he went through that whole 2008 2009 pain of losing houses to the bank and all that, and then he went away from real estate, but then he came back and he's like, oh, I'm gonna just try this other strategy, which is I'm just gonna pay off these properties and cash flow on them for a very long term. So what's your take on that
Well,
particular strategy of having houses paid for?
I said two things that's a solution to that already. And one was find the buyer before you buy. You're not going to get stuck with a bunch of property at the wrong time in the wrong neighborhoods, number one. Number two is you've got the benefit of paying them off with worth less dollars. So why would I pay it off now when I can pay it off later? So I like to keep my cash flow in order to invest in more property. And that has worked out very, very well for us. And you're in this business long enough, and then pretty soon, every year, mortgages just naturally fall off. They just naturally pay out. And you're going, wow, my cash flow just went up 300, 500, $1,000 a month just by paying off those mortgages. So definitely it's a plan. And for some people, it might be a comfort level to pay off mortgages early, but for me, I'm comfortable paying them off over a long time.
Yeah, I'm on that boat right now. I got a property that I'm just gonna pay off. But I see the way I see it is that property that's paid for is it equals about 3 or 4 properties that I have to buy with a loan, right? So, and those are cheap houses that we bought and fixed and flipped for Burr method basically.
Mhm.
But then I'm like, okay, do I want to go get 3 or 4 more, or do I just keep this one and pay it off, and then then I'll go do another one, and kind of like going with multiple properties, but pay for basically no owning anything. But then putting, of course, insurance on them, but just in case they burn down, right? Like it's happened to me in the past. I've had a
It's
few.
happened to me too.
I actually did better with the insurance money, to be honest with you. So, but
Yeah, they get nervous too sometimes. The insurance company, they get nervous. Like, did you do this on? I was out of town. I wasn't even in town when it
man,
happened.
true story. I had the fire marshals from the city of Fulshire come knock on my door about a month ago because there was a property that I used to own. I don't own it anymore. That burned down, and but I don't know why the new the people we gave the property to, they never filed with the with the county the paperwork. So they thought I was the owner. So they came to me and they're like, "Are you Mr. Ricardo, the owner of whatever LLC?" And I was like, "Yeah." Well, your property burned down, and I was like, "My property burned down, man." I almost had a heart attack because I'm thinking about another property I own. And I was like, "What are you talking about? Like, where's this property located?" And he's like, "Oh, this is in the city of whatever." And I'm like, "No, wait a minute. I don't own anything there. Like, it's been a while since I owned anything there." He's like, "No, it's got your name on it. It's got your LLC. You're the owner of the LLC." was like, no, we got rid of that, and it's not ours anymore. It's somebody else's. So they need to go figure it out. You guys need to go figure out what happened with that person. But because they thought somebody burned it down in purpose for insurance money,
Mhm.
and they even asked me, "Do you have insurance on it?" I was like, "No, I never put insurance on that property because that thing was a tear down. Like, why would I put money on a tear down? I was gonna tear it down and build something brand new." So it was kind of like a lot. So um they interview me, then they interview my old business partner that wasn't that the guy even told us like, why would anybody waste time burning that thing down, you know? so so they fairly soon they ran into like I guess a roadblock, you know. They figure, okay, that thing isn't worth what we thought it was going to be worth, and it's just land basically. um but all right, so that's your take on pay for properties. Is you like to pay them in time with somebody else's money as well, right? So
Exactly. The person that's moved in is giving me the funds to do that with, and I'm making a cash flow. And another little secret I like to give people is that not only do we make the difference, a typical landlord has their debt service and then they have the rent and they make that difference. And then they have to pay for water heaters and roofs out of that. We don't do that. So we have 25 profit centers over and above what a normal landlord makes. So we look at each one of our customers as a resource that we can provide things to. You know, they are a market. And so as a result of offering other things to the existing clients that we have, we're able to be of service and make up to 25 different profit centers over and above that. So we're making a lot more cash flow than a typical landlord does.
are you? So I would say you're in the node business, right?
We evolved to that when
Okay.
people get to the owner financing level, or they bring at least 10% of the purchase price of the property to us, then yes, that's owner financing. And we do agreement for deed, contract for deed, and some states like your state there in Texas, it's only 21 days to foreclose. You can just go ahead and give them the deed because it's so quick to be able to get through the process there. Unlike other states, which can take literally years to
Right.
get the property back.
Yeah, Texas is a very investor friendly state. But it's, you know, it's always better to foreclose on the property outright than to do a deed in lieu for foreclosure here in Texas, because when I discovered when you do a deed in lieu, if there are judgments, they attach to the next owner. So those judgments pass through to the lender, but when you do a foreclosure, it wipes everything out. So
Yeah.
yeah, I had a lender that he was doing a deed in lieu, and he reached out to me. He said, "Hey man, I'm doing a deed in lieu," and I said, "Don't do that. Just if you're doing a deed in lieu, make sure that person doesn't have any judgments, that doesn't have any liens or anything like that attached to the property, because if you take on that property and it's got all those things, they're going to transfer over to you." And sure enough, it did. And he thanked me. He's like, "Man, thank you so much for it." It's somebody that was in the lending business that
Yeah.
don't necessarily know all the rules and ins and outs. And I said, "Well, good for you, man. You were able to
Yeah.
wipe all that stuff out, and now you own the property outright."
Yeah, and it's easy to do. You just do a title search. You do a title search before you take the deed in lieu. And we have a property release agreement that we do with our clients, and or if they're moving out on us for whatever reason, we know that people have lives, right? Breakups, breakdowns, move outs, nursing homes, whatever the case may be. And so they need have some change in their life, and we go ahead and take it back if we need to.
Yeah, it's unfortunate, but at the same time, hey, so sometimes when people actually get foreclosed on, it's a blessing in disguise, because they're able to move on to the next phase of their life, right? So that's not necessarily a bad thing. People see it as a bad thing, but it's not, it's actually not. It just makes the life better on the lender, and because now the lender can repurpose that asset, and then now these people can move on to something else.
Mhm.
Um, Lou, if you were a brand new person joining a real estate, the real estate world today, wanting to get into real estate, what would you tell that person? Like what would your advice be?
You know, definitely education. There is a learning curve to this business. This is a wonderful, amazing, incredible business. I'm so blessed that it got exposed to me early in my life and that I was able to buy my first house when I was 18 years old. And it's the first house I ever lived in. And so I strongly encourage you to just get on board, stay on board, buy something, frankly, even if you pay retail. Because if you'll hold on to it long enough, just wait, like we taught you during this podcast, you can keep that asset and it would be, as Ricardo was saying, worth $1 million, whatever the number that would be in the future, but definitely more than you paid for it. So just get something, get it as quickly as possible, monetize it the next day. Don't try to build something or get into that whole arena. That's a whole other world. Buy something that exists where you can touch it, feel it, monetize it the next day. Those are the kind of assets I like. Now, with that said, there's a lot of different options available to somebody coming into this world. And it is one of the reasons I invented the house monster. It's let's go find a buyer. Let's go find it. How can you screw that up? Let's go find a buyer that has down payment money that can afford the monthly. And then you go about finding a property, buying it right, buying it cheap, and buying it creatively. So I'm a big believer in creative financing. I've been doing that my whole life. I've never been to the bank. I've never qualified for a loan on a single family or small multifamily property. I've shown I can't countless investors how to do exactly that, where you don't need the banks if you know what to say and how to say it. So actually, when we go visit with a seller, we have a presentation that we do with a seller. We go through telling them who we are, what we do, how we operate, how we can help, how we're different than every other investor out there, and how we can solve problems. And then we talk about, and the first offer we make to them is a cash offer. And then if they don't like that cash offer, we show them how we can get creative and talk to them about that concept and take over their existing financing or get them to carry back financing or a combination of the two. So it's definitely an opportunity when you're just getting started in this business to not mess it up. This is too good of a thing to mess up. Plan to get with it and stick with it. Plan to get the education necessary to succeed. Get the right paperwork. Get the whole enchilada, which is what many, many successful real estate investors have done. They've gotten my whole enchilada of real estate investing. And as a result of that, they had the paperwork necessary to succeed in multiple different arenas of the business. And they adopt the concept of getting the buyer before you buy. I think that's the safest way to do this
What's
business.
the website, Lou, for the monster, the house monsters?
The house monster, they call it in Nigeria. The myhousemonster.com and also
So
streetsmartinvestor.com.
my
Street
house,
Smart.
let me find him here real quick. Myhousemonster.com. So that's turn your business into a house monster, right?
Yeah, baby.
Amazing. So you got the whole is a landing page here. Guys, go find myhousemonster.com. And the other one you said it was
streetsmartinvestor.com.
investor.com. Now, why would I get on the Street Mad Investor as a oh, that's a pretty website.
Thank you, sir.
Yeah, it's good. It's pretty good. Why would I get on the Street Mart Investor as opposed to the my house monster?
Well, that's where we have the tools, the training, the technology, and the team for real estate investors, people that want to build a business doing what we do. So they're able to find out about our tools and our upcoming training. We have a Millionaire Jumpstart 4 times a year. And that's a 3-day event where I take the whole business model from soup to nuts. And it's very inexpensive, only $99 for people to join me for 3 days of training. And it really gives a lot of data, a lot of information, a very valuable um, seminar manual where we have it loaded with some of my best documents, and we make it very available for folks to be able to join us and really learn what we do and how we do it. And it's everybody from people just getting started to real estate agents, mortgage brokers, real estate investors, and people that just want to build wealth, because we do teach about land trusts and personal property trusts there at the event as well. We have paperwork for that. So it's a lot of great information over a 3 day period of time. So I encourage people to go to
I see
millionairejumpstart.com
that the
as
next one you
well.
got is Friday, December 5th,
Yes, sir.
2025. I'm actually gonna make sure this episode goes out way before then, so
Baby.
so we can get you some people over there. Hopefully it's in Atlanta, Georgia, correct?
Yes, sir.
All right, amazing, Lou.
Easy in. We're at a hotel very close to the airport. Catch the shuttle, come over there, get sequestered with us for 3 days, and you will have the most amazing experience in your real estate career, even if you've been in the business for a long period of time. I had somebody just join me from Texas. He has 175 houses. He joined me because he said, "You fill all the gaps that I have not been able to fill in purchasing 175 houses." So it's remarkable, some of the folks that we attract. I just had an interview with somebody that's done 5,800 houses using my paperwork. So it's a lot of fun to be a teacher and be able to impact people's lives like that.
And this is the beautiful thing about this business, Lou, is that I know I have plenty to learn from you. Even though I've done, I don't know how many deals. I've done creative financing. I've done subject twos, fix and flips, wholesaling. I've done a lot of wholesaling and fix and flips. But there are things I don't know.
Yeah.
Right. And if I don't surround myself with someone like you that has more experience, number one, and then number two, is tapped into a whole different niche than me, how do I know? Like, that's why you're attracting these professionals, because they're professionals already in what we do in real estate. I am a professional real estate investor. It's just that I don't know some of the things you do, right?
Exactly.
That's it.
It's such a big game. It's
Right.
such a big game. There's so much that's available for everybody. And that's one of the reasons I love it, because there's just different niches that you can springboard. For example, if we buy a house right, we buy it cheap, we might, from a cash flow perspective, make it an Airbnb. We might make it assisted living. There's so many different offshoots that we can make from buying it right and buying it cheap and buying it creatively, not going to banks and not qualifying for loans. That's what I look to do.
I love it. Will you have the ability to do this on Zoom or like stream it? Or
We
is
do.
it you do? Okay, perfect. We're gonna put a link down below. We'll make sure we'll find it, Lou, after we edit and upload this podcast. Do you have a final message for our audience?
Man, you're in such a great market. We're going into such an opportunity to make better deals. The market is a little bit nervous right now, which is a good thing. And I want them to get even more nervous. But, I don't worry about things like that because we already have a customer for the property. And that's one message that I definitely want to encourage you to do is, if you're sitting on the sidelines and thinking about real estate, get on in here. There's good stuff out there for everybody. I was blessed to start this over 40 years ago. It has been an incredible journey. And I'm just so thankful. Over 1,000 properties that we've been able to buy and sell and do things with. And I don't even know what the number is, to be honest. This is a great business. It's very forgiving. And I would say jump in there as soon as you possibly can.
Even if you're a real estate investor and you don't know what the next phase of your life is in real estate, I highly suggest to connect with somebody like Lou, and go to his seminar and get to see his community as well. Because honestly, Lou, I would go if I was here in the US, but I'm moving down to South America. So those dates, I'm gonna be gone. I'm not gonna be here. That's why I asked if you had it on, if you were gonna stream it, because I would love to watch it. Although it's better when you're in the crowd with the people experiencing
really
experiencing the whole enchilada, right? So
it's so much better in person, live and in person. You get to network with people, you make friends literally that you're going to have for the rest of your life. So I love the live. That's why we do live. We could do it from a studio. We did it during COVID. We had to do studio, but I love doing the live because I can connect with people. We go to dinners together, we go to lunches together, we do things, as a family, and we welcome people to our family for sure.
brother, thank you so much for being here today and for bringing so many different nuggets to our audience. I appreciate you. Guys, don't forget to hit share, like, and subscribe. Go find Mr. Lou Brown on YouTube. He's got a beautiful channel, and tell somebody about it. Okay, bring somebody new that maybe if this message is not for you, maybe it's for somebody else. So with that being said, I'll see you on the next one. Thank you so much, Lou.
Yeah, baby.